Hello everyone, this is Professor Xun Bian. In this video tutorial, I want to show you how do you calculate the present value of an annuity using the TIBA2 plus financial calculator. So the question we can go over here is we ask the question, what is the present value of a 10-year ordinary annuity of $500 per year with a discount rate of 7% per year, right? In this case, if we're talking about annuity is basically a stream of cash flow with a constant payment lasting for a specific number of periods. Specifically for this example, the constant payment is the $500. You're getting that 10 times. And specifically, you're getting a $500 every year. For 10 years. That's what we mean by annuity. And additionally, by ordinary annuity, we're assuming the timing of those payments, right? So the first payment actually comes in at time 1. We're trying to calculate the present value at time 0, right? The first payment, like I said, comes in at time 1. The second payment comes in at time 2. Right, so basically you're receiving the payment at the end of each year. That is what we mean by ordinary annuity. So to calculate the present value of an ordinary annuity, what we do is just like what we have done in the past. We use our financial calculator, we put numbers, we put the information that we have one by one into the calculator. So first of all, as always, you want to clear the memory of your calculator. You do second, reset, and enter, and then you enter N. You enter 10 for your investment time horizon. You enter 10 for N, and then you enter 7 for IY, right? For 7%. As always, if you're putting a number in as IY, you don't need the percentage sign. You just put in 7. In this case, 7 for 7%. And then you put in 500 as your PMT, right? PMT is what the financial calculator uses to capture reoccurring payment. In this case, because we're dealing with an annuity, $500 does reoccur 10 times, right? So basically any number that you're putting in as PMT, the calculator assumes that this number that you put in is going to reoccur n times, right? That's precisely what we want for this example, because the $500 payment is reoccurring 10 times, right? And then we can go ahead and calculate the present value, right? So if you run the calculation on the screen of your calculator, you should get the right answer. That should be $3,511 plus some change. So let me bring in my financial calculator and run this calculation. As always, if you have a calculator by your side, you're welcome to join me and run this calculation at the same time. So you get to see how those numbers, how those operations gets put together. All right, so the first thing is second, reset, and enter, right? And then what I want to do here is I want to put in 10 for N, and then 7 for IY. Right, as I said, we have this $500 reoccurring 10 times. We put in 500 as my PMT. Then I can go ahead and calculate the present value. So not surprisingly, you see the answer that I have here is the same as the one that I have on the slide. And this is, how do you calculate the present value of an ordinary annuity? So in some other situations, you may be dealing with something called an annuity due, right? Annuity due is again a stream of payment lasting for a specific number of periods, but as compared to ordinary annuity, right, the annuity due assumes the first payment actually comes in at time 0. Again, let me go back to, this is the 10-year ordinary annuity, right? So the first payment actually comes in at time 1. We're calculating the present value at a time 0, but if you go to the 10-year annuity due, we're again calculating the present value at time 0, but the first payment comes in at time 0. So essentially, you're moving, if you compare annuity due to an ordinary annuity, you're moving all of those payments forward by one period. You're still looking at 10 payments, right? But the timing of those payments are a little different. You actually moved all of them forward by one period. So the first payment comes in at time 0, the second payment comes in at time 1, the third payment comes in at time 2, so on and so forth. That's basically what you have when you have an annuity due. If you have an annuity due, right, when you run your calculation, you do have to make an adjustment because the calculator automatically assumes you're doing the calculation for an ordinary annuity. But if you're dealing with annuity due, you can still do the calculation, but you have to change, you have to make an adjustment on the calculator, which I'm going to show you in a minute. So specifically, what you do is, as always, you need to clear the memory, right? And then you want to switch from the end mode to the beginning mode. Okay, so automatically, by default, the calculator assumes that you're in what we call the end mode. The payment that you have actually comes in at the end of the period, right? But because we're dealing with the annuity due, right, the payment actually, you receive that at the beginning of the period. We want to go from end period, and we want to go from the end mode to the beginning mode. So you can do that by doing second beginning mode. BGN actually stands for beginning, right? Second and set. So that's going to allow you to switch from the end mode to the beginning mode. And then you want to quit to go back to your calculation, and then you can just go ahead and run your calculation, right? So you got 10 for N, 7 for IY, 500 for PMT, then you can go ahead and calculate the present value. So if you're moving all of those cash flows forward by one period, obviously this is going to change your present value. As we talked about in finance, money has time value, right? If you're receiving the payment sooner, right, obviously that's going to increase your present value. And that's precisely what we see here, right? This is the calculation that we did for the ordinary annuity. Here, this is the present value for this annuity due. Obviously, this one is it's greater. It has a greater value because you're receiving all those payments one period sooner. So let's run this calculation here. All right. Again, I want to do second, reset, and enter. Right. And then what I want to do is I want to do second. Notice here there's the BGN because I want to access the BGN. I do have to do second first. Right. So if you hit the BGN, on your screen, you should see END. That's the end mode, right? This is basically telling you you're still in the end mode. You have to change that, right? You have to change that to the beginning mode. So what do? Is you do second and set, right? So on the screen, you should see BGN, right? Which stands for beginning. And then in the corner here, you should also see BGN, which means that you are in the beginning mode, all right? What do you do here to continue is you want to do second and quit, right? This is going to allow you to go back to your calculation. Now you're ready to do your calculation, right? As you can see here on top here, you see BGN. This is, the calculator's way of reminding you you're in the BGN. That's precisely what we want for this calculation. But going forward, you may not actually want to stay in the BGN forever, because for some other calculation you might actually want to go back to the end mode, right? So you want to do second, reset, and enter to clear that out, right? So but this is, as long as you see there's a BGN, you are in the beginning mode. Okay, so now we just do the other things we have. We got 10 for my N, 7 for IY, and then I have 500 for my payment. And now I'm ready to go ahead and calculate my present value, right? The rest of the calculation basically goes, very similar as what we had before. The only thing that you have to watch out if you're dealing with an annuity due is you have to switch from the end mode to the beginning mode before you run the calculation. So this is basically how do you calculate the present value of an ordinary annuity as well as the present value of an annuity due. All right. So as always, if you have any questions regarding the material that we covered here, please feel free to let me know. I'll be more than happy to help you out. I'll be more than happy to answer any questions that you have. As always, thanks for watching, and I will see you in another video tutorial.